Thanks for listening. This is Brian Hurley from Business Performance Improvement. The podcast Lean Six Sigma Bursts are short lessons, comments, Q&A, and insights. If you have a question, send your question through the Anchor app, and we might feature you on a future episode. Or contact me at biz-pi.com. This question comes up more often in Six Sigma projects because there is that focus on cost savings. But how do you capture when you have a financial reduction? Is it a hard savings or a soft savings? The main thing is whether or not the savings is already occurring, so that there's already something in the financial statement that shows that the expense is being paid. If it is, and you are able to lower that expense going forward, then you can say that's a hard savings. If the savings is not realized yet, let's say it's in the budget but hasn't been spent yet, or it's a labor reduction in time. So the idea is that someone's going to be freed up and now they're going to be able to spend more time or do more work, but you don't know if that's going to translate into actually more work or more output or more sales or more total revenue, then that's considered a soft saving because they have not seen that come through yet. And only until you see that sales come through can you then capture it as a hard savings if there was already limitations on that capacity. And so that what you did in the improvement freed up capacity to do that. So it gets a little tricky. So one project where I did actually save money as a hard savings on a reduction in labor was we had a process that was routed through a department, and the person who worked in that department was going to retire. And so they decided that if we could improve the quality high enough, the process would not have to route through that expert anymore, and they did not plan to rehire anyone to replace that person. And so that's where a lot of our focus for the improvement came, was improving that process. They didn't rehire anybody after that person retired, and so we could take that salary and say that was a hard savings because they were already paying the salary, and then they could see that they were no longer paying that salary. So that's an unusual situation. Most of the time, we're not looking to reduce labor or jobs. We want to redeploy people to where the need is. So if, let's say that you do free up some time in a process and it takes 5 people to do this work, and now you can get it down to only 4 people, then the salary is still going to get paid for that 5th person because we're just going to move them to somewhere else where there's more opportunity, there's more work that needs to be done, where they're having more problems. And so the company doesn't see a change in the salary, and so they see it as the same. So the only thing you could take for a hard savings would be, or hard benefit would be, when you see that another group is getting more output with the same amount of people. And then you can see that there's some productivity gains and there's more work being produced for that time period. So hopefully that makes sense on the difference between a hard savings and a soft savings. If you're going to spend money on a piece of equipment and don't spend that money, that's a soft savings because you didn't actually buy it. If you were paying $7,000 for a service and you're able to cut down the number of software licenses you need, and now you only spend $4,000, then that's a hard savings because you were already spending the money. If you have any other questions, let me know. Thanks. Lean6sigmadefinition.com has a list of glossary items about popular process improvement terms, along with the history of Lean and Six Sigma methods, and key influencers like Dr. Edward Stemming, Henry Ford, Taiichi Ohno, Shigeo Shingo, and many more. You can also learn how to access affordable Lean and Six Sigma training and certification. Visit Lean6sigmadefinition.com.